Hello and welcome to Crux Investor. We caught up earlier today with Jim Paterson, who's the CEO of ValOre Metals, TSX-V listed explorer of PGMs. And if you want our thoughts and opinions on that conversation and indeed the company itself, you can find that at cruxinvestor.com/club. You can also get detailed company reports, commentary from market experts from around the world on a variety of commodities and companies. There are training videos on there, also summaries of all the interviews that we have done just to save you a bit of time. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other. So go join them now at cruxinvestor.com/club. And of course, your feedback is very welcome. So do give us a like, leave your thoughts and comments below. And if you want to see what we talked about, take a look in the description below. Jim Paterson, how are you doing, sir?
I'm doing incredibly well, Matt. How are you?
Fine. Looking forward to this weekend. Really am. It's been a long week, I have to admit. But looking forward to talking to you. We should have talked last week. I think we decided that this week would be better because, as we see, we have a press release out today with a bit of detail, and I think it's going to be way more fun for people to listen to you talk about that.
In your honor.
Thank you. I'm sure that's not true, but let's pretend it is. And how are things over there? Things good at home?
They're going very well indeed. And I'll just get back. The news release was in your honor because you're a man who's known for tough questioning and looking to get into detail. And I wanted to make sure I could talk about everything possible, look under the hood as much as possible. Hence the detailed news release.
Well, that's very, very kind of you. And in your honor, I will grill you. So
backfired on me.
You didn't think that through. So why don't you kick us? Give everyone that 1 minute overview of the business, and then we'll pick it up from there.
Sure. We're an exploration company. We trade in the venture exchange, about a 28 million Canadian market capitalization, Canadian dollars. We've got projects in Canada and Brazil. The project that we have in Brazil is our primary focus. It's a platinum or palladium platinum project, or a PGE project as we call it. It's in northeastern Brazil. It's a big land package. It's the type of land package that we like as a group. Big district scale potential, as you love to discuss. In this case, we believe it to be very true. And we've got 2 rigs drilling on the project right now. It's an exploration stage project. We were blessed, though, the company from which we bought it had defined a resource, and a JORC resource. We actually came in and defined a 43-101 resource, a little over 1 million ounces. And in this particular program, we're looking to expand those resources, advance other targets that had been drilled by previous operators or explorers, and then make our own discoveries across the project. Okay. And that is the 1 minute. Okay.
It's not bad. You've been working on it. Need to ask a question. We've got some questions in here which have been sent in very kindly by people who watch the show and subscribe to us. And I want to be able to ask this one, and then so we can park it. Okay, you've got uranium and gold assets. What are you doing with them?
Holding them right now, and we have the type of group that has the potential of monetizing those assets through some sort of corporate transaction, but we're not working on that presently.
Okay, fine. So we'll definitely park them then. I think we need to start off because there's a lot of new people coming into this mining space, generalists, people who've been investing in technology, healthcare, biosciences, and looking at this and wondering what they should be staring at and not necessarily comfortable with the terminology. And there's some people who've been in mining for a long time who also are unfamiliar with some of the terminology like PGE, Platinum Group Elements. What is it and why should anyone care about them?
Well, in our case, the PGEs that we're exploring for are used in the auto sector, so catalytic converters. So for the most part, it's driven by auto demand and the drive to make automobiles cleaner and to spew out less nauseous fumes. So it is actually kind of a general policy across the board to incorporate more palladium or platinum into the vehicles that are being used and manufactured globally. So, but we are slated to global auto demand, and this year has been good. At the beginning of the year, I thought, holy, we're going to shit the bed in terms of auto demand. It's been not bad. I don't know what 2021 will bring, but that is a big driver. And then from a platinum perspective and palladium to a lesser degree, there are a number of investors that may like that instead of gold. They're precious metals. But for the most part, palladium, platinum, and to a lesser degree, rhodium is used.
Okay, so that explains what PGEs are used for, use cases, etc. But these are usually quite expensive. They're quite erratic in terms of pricing, and if you time it right, you can get decent margins on it. I mean, did you set out to go after PGEs? Was that the objective day one?
Absolutely not. I think though that what our group is, we're kind of commodity agnostic, and we don't chase flavor of the month, which is what we talked about in our very first interview, you and I. But in terms of platinum and palladium, they're not really going in lockstep. Platinum, I would say, isn't really overvalued at all right now. It's trading in the 800 to 900 range, 860, I think. And then you've got palladium, which is over 2,000, and some of our posters on the different billboards and the people that follow us are talking a lot about rhodium, which is a very niche mineral, which obviously is getting squeezed right now. The prices have exploded. But these types of things, you can't, if you're an exploration stage company and you really are realistically trying to advance the project to a point where either you put it into production or someone buys it, you can't be swayed by the day-to-day pricing. The day-to-day pricing may get some retail guys in, a small component, but the real big money doesn't say, well, rhodium's at $10,000 an ounce right now. It will always be at $10,000 an ounce, and thus we can make our 5-year plans based on $10,000 an ounce pricing. We don't do that. So what we look for in a project is, we're looking at the potential future mining scenarios, the logistics of it, the access of it, the processing of it, and the potential to grow it so that it's a significant sized resource that a big company will come in and say, we can weather the commodity pricing storms, and we think your project is something we should bring into our portfolio.
Those guys are going to need a big project. This is why you keep talking about district-wide, because it needs to go through multiple cycles. Because it's not like, let's go build a processing plant to process gold, silver, whatever. This is very specialist. So is that why you keep talking to me about district-wide scale of opportunity?
Yeah, because when I think about what it would take for a major mining company to make a decision to come into a country like Brazil, if they were a palladium or platinum producer, it's not for 100,000 ounces. They'd say, well, we have to set up an office and we have to have this massive team. And so it's got to, be something that we can be mining for 10 years or 20 years or longer. And it's got to be something that can kind of ride out a couple different cycles. So yeah, it's got to be big. It can't be 500,000 ounces. However, the thing about a palladium or platinum project where I see a little difference is the industry is, albeit very concentrated. So there are only a few different producers, like 5 of note in the world. And for the most part, the production of the PGEs comes from South Africa or Russia, Zimbabwe, in some cases, the Stillwater complex in America. And then you've got North American palladium or implats in Canada. But for the most part, it's Russia and South Africa. So it's a highly concentrated industry. However, I believe that there is some crossover. So if you had a precious metals producer or a gold producer, I don't think they'd be scared of a platinum or palladium mining project as long as the metallurgy wasn't crazy. I think that they could look at it and go, we understand this. It'd be very different for a gold producer to pick up a fertilizer project, for example. That would be completely outside their bailiwick. But I don't think a palladium platinum project would be. But for the most part, the work that we're doing has to make sense for those big players in palladium platinum, although we have some other target audience perhaps.
Okay, so I want to talk to you about your approach. I want to talk to you about your approach though, Jim, okay? Because you're market cap mid-20s, okay? You're somewhere in there. So it's not a big company. You also have not gone out to market and raised a lot of money. You are 19.9% shareholder in the company. So you're very interested in making this work. And you're also loaning the company money rather than going out and raising money, okay? So do you not feel that's a bit kind of small? Shouldn't you be going out and finding a partner to come in here and put some capital behind this if you think you've got what you say you've got?
Yeah, I think that it will be a strategy perhaps in 2021. And I think that there's a couple things that I was worried about that were kind of unique to this year. And it was specifically around COVID and the impacts of COVID. So initially, at the beginning of the year, we knew that we wanted to do work, and we knew that we would need to have new capital to do that. And what I was really worried about is that we would raise the cash from equity investors, and then a month later, I would say to them, too bad, so sad. For some reason, we are unable to drill. Because of COVID lockdowns, the rigs can't move, and because you're an equity investor, we're not giving you your money back. And you'd be very pissed at me. And why? Why do that? And so that was the one thing that was holding us back. And so we went down the path that, the board approved the financial transaction where I'd be advancing money to the company. And as we went along, did not have problems with our drill rigs. They're not being impeded. We're not making the people of Capital Mor or Pedra Branca area sick. The drill rigs are running super productively. We've got a full Brazilian team. They're doing incredibly well. So that's not an issue. And now we've got all the results coming in. So now I'm not going to do a financing. We're kind of pregnant with results, but very soon we'll need to do that. And we'll definitely need to raise money for 2021. Absolutely.
Okay, so let me get into that because
without those issues.
Yeah, for sure. But let me get into that because some people sent questions in, and I want to give you the chance to kind of clear them up. Okay, so 19.9%. Can you not go over 20? What's the rules there? Why do you issue a loan charging the company? What are you charging the company?
10% per annum.
10%.
Plus the 2% stamp.
We're definitely coming back to that. So can you not go over the 19.9%? Does that cause issues?
It does cause issues for a Canadian listed company when you become a control person. It becomes really challenging. You can't. First of all, right now I'm right at 19.9, but in the future, if there are other investors that come in, and that's our goal to do that, so we will. I'll have significantly less as on a percentage basis, and I can buy stock. And I can obviously sell stock as well. But if you're a control person, you can't without a major issue. And so basically, I like to be able to support my own company, and I like to buy stock in the open market, and I don't want to be a control person. So that's the choice I've made.
Okay, so you're up to that limit. So let's come back to this loan at 10% plus what? 2% of what?
A standby fee.
What's that mean?
So basically, I'm putting money aside, and when the company needs it, they cash call me. So for that, I get paid 2% on the total value that I will loan to the company. But then the 10% is only charged on funds when they've been advanced to the company.
Got it. Okay.
So for example, on $1 million, 10% per annum, it doesn't mean I'll get paid $100,000 for the year. But as it's drawn down, then it's calculated on a per annum basis, 10%.
Okay, so it's 2% to set up a facility, just to have the facility there as and when the company needs it.
Yes.
But as they draw it down, on the money drawn down, they also get charged a 10% fee on that. Do the board sign that off?
Absolutely.
Right. Do you think do you think those are reasonable and normal rates?
I think it's reasonable and normal. And one thing that there is not is bonus warrants. And so if you look at any of the companies out there, that's where you have to go to the exchange for approval, because those can be usurious, some people might think. And I just did not charge bonus warrants. So, it's just straight cash.
Okay. Should we talk about this press release today?
Sure. Yeah, let's do it. Well,
it's kind of, I kind of liked it. You kind of explained a few things. It's good. So what were you hoping for people to think when they read this?
Well, you and I talked about it before. It was actually my father who caused me to want to clarify this, because he's like, you know what? I'm just a naive old banker, and I can't understand what the hell you were talking about, is what he said.
You know he doesn't mean that, don't you? When he says naive old banker, what he means is I'm smarter than you. Just so you know.
He may have. He's a pretty generous man, but he basically told me I need to simplify it. And the problem with particularly mineral exploration results, when you're actually talking about assays, from a regulatory perspective, you can't simplify it. You really have to over-explain it. But I do sympathize with people when they look at our news release and it's 8 pages long, and 5 of that is disclaimer and QA/QC and a whole bunch of other stuff. So what we tried to do is is take the releases that we put out during the year and synthesize them and kind of put some structure around them so people could understand how we were thinking about the exploration on the project, and then how the news releases from the past 9 months actually fit our strategy. And so that's what it is. I mean, we laid it out, we bolded beginnings of paragraphs and everything else, so you can kind of figure out how we segment this stuff, the information.
Okay, so give me some of the numbers. So you're 80% of your way through a 6,000 meter drill program. So what? What do you want me to know?
Well, what we wanted you to know specifically was that the types of targets that we were working on. So, and you may say, well, so what? And then I would say the types of targets that we're working on will probably dictate the advancement and development of the project. So if we are drilling off something that was a 43-101 resource, and we drill and we step out 100 meters or 200 meters and we hit mineralization, then what that means probably for 2021 is that we'll go back in and fill any gaps we can so we can expand the resource. And obviously, the larger the resource, the potentially larger the NPV down the road when we actually wrap some economics around it. So we did that in 2 areas so far, Trapia 1 and Trapia 2. And then that third area that we're literally starting this week, the 2 rigs are barreling down to get onto their drill pads. That's also resource expansion Santa Amaro. So that's one element. Assays are pending from Trapia 1. The assays will take a little while because we just sent the samples off recently for assay for Trapia 2. And then we're just literally peering over the edge of our skis, ready to start drilling Santa Amaro, which is in the north. And the thing I'll say about Santa Amaro, which isn't in this news release, is that it's just far enough from Capitan More that it did not get the attention that it deserves. And it's a couple hours on a couple bumpy roads, and it was just enough to dissuade some of the previous explorers not to spend too much time up there. And we believe that we're saving the best for last with Santa Amaro, but the drills will tell us, and we're starting this week. So we're all really excited about it, but the reason why we didn't drill it first was that we looked at this program and said, how can we make sure that we get this thing permitted so we're not slowed down? We're minimizing the amount of money we're spending on road building and logistics to get to these drill pads to drill it. And how can we do it so that we quickly and efficiently pound out some holes that grow resources? And in this area of the world, there is a short, albeit short, but there's a rainy season. So you don't want to be drilling in areas that are a little bit mountainous with dirt roads when it's pouring rain and the roads are eroding in front of you. So we waited until the optimal time when we wouldn't have to, when we minimize road building and logistics, and we can go right in as cheaply as possible and drill holes. So that's why we did send the best for last in many respects from an exploration perspective.
Okay, I want to talk about this because I want to talk about like known resource expansion versus target drilling. Okay, but in a second, coming back to the assay component, when assays don't come out with press releases, that sometimes people get nervous about that. Is there a kind of backlog of assays in country? I mean, what is it slow, or is it just the fact that you've only just put them in?
Well, they're different. Okay, different answers to the same question. So as far as Trapia 1, it's pending. They're coming back right now. We don't have them yet, but they will not be long. Trapia 2, they will be 4 to 6 weeks. I mean, at the shortest time frame, because literally we just packed them off and sent them off this week. So they got to get to the lab, and they be 4 to 6 weeks. Santa Amaro, we haven't even drilled a hole yet, so I can't tell you. I mean, we only send stuff in if it is the right rock. We don't know whether it's mineralized or how mineralized it will be in terms of PGEs. But at this stage, the stuff that we've sent in, our fingers are crossed. We hope it's good. The stuff at Santa Amaro, we don't know. We haven't drilled it yet.
It's really interesting, actually. You said something that I was going to... We were talking the other day about tricks of the trade in the junior mining space. So it was like you only send in the rocks you think you want to. So does that mean you do drill holes that don't get sent in for assay, which don't get reported?
No, they get reported, but they would be reported as either no significant results or, a company like ours will disclose that we didn't hit the unit. Right. But we're not going to... There's no reason to send rock in if it's not the rock. I mean... That's not true. There certainly have been examples in history where rocks were re-assayed and they ran. And the dogma of the time, when the geologist was logging the core and he or she said, that's the wrong rock type, we shouldn't assay it, it's going to be dead. And it, history proved them wrong. But in this stage right now, we're cost effectively pounding holes. We're looking for an ultramafic unit.
Okay.
And so when we hit that unit, we're excited. And, they describe the geology, and we choose, we get all the rock organized, and we send it off to the lab. We could be wrong. There could be areas that aren't ultramafic that for some reason would be impressive from a commercial perspective, but we ain't on that track right now. We're looking for mineralized ultramafic.
Okay.
Rock.
Fair enough. Thanks for explaining that. So it said, I want to understand how a company of your size, with your available cash, makes decisions, because you talked about known resource expansion, which obviously says that down the line that could be really valuable to us. There's the size of the ore body, really important to understand, and the more exciting stuff that maybe retail investors get excited about, which is target drilling. Okay, so you guys you inherited a lot of data when you acquired this, and you've been building up additional data as well for this discovery drilling. So how are you making decisions between how much time, money, and effort you spend on known resource expansion and target drilling, and what do you know about the target drilling?
I can quantify somewhat our decision-making process just by meters drilled in phase 1 and phase 2. That might be helpful. I mean, roughly 5,000 meters of 6,000 odd meters is resource expansion drilling.
But how much are you spending? How much time, resource allocated?
The more time is spent perhaps on some of the targets because they require a move of the rig. So if you're moving into an area and you haven't drilled there before, you have to move the rig to get there. So kind of like proportionately, there's more time and money perhaps spent on those discovery drilling or the target advancement holes versus resource expansion, where you park your rig, you drill your hole. If you hit, you move 65 meters to 100 meters down the road and do another one. With the discovery drilling, you're saying there's a target. You maybe had to clear some brush, move a road in there, which takes time and some extra money, although it's quite cheap down there in Brazil. And then you build your pad, or you use an existing pad and you drill it. So a little more time. But how we kind of looked at it this time was the very first 5 holes that we drilled were resource expansion holes at a target called Trapia 1. And we hit what we thought was the unit in those holes. And while we were waiting for the results to come back, we moved the rig up and we tested a bunch of targets to the north. And then we came back down when we got the assays from Trapia 1 because we hit. And we said, okay, let's drill this thing to the south now. Let's see if we can pull this thing down and expand resources. So it was really quick. It was about less than a month. And we tested all these little targets to the north and then came back. And now we're finishing off the program.
Okay, so because the reason I said people get excited about it, because you can spend a little amount of money and unlock a huge amount of value with the exploration component. Whereas with the known resource expansion, you're just kind of filling in the knowledge gaps in a way, in terms of step out and so on forth. So the effect isn't as great. So, one, do you agree with that? Is that the case?
No, I think you need them both totally, because if you're constantly swinging for the fences, you strike out a lot. And that's fine if you've got unlimited capital and you're fine spending a whole bunch of money finding new shareholders all the time, because that's what it'll entail. If you're failing for 15, 20 attempts and to get one home run if you're lucky. So I think you need to do both. And I think that what you need in any kind of public company is a mixture of shareholders, some that are short-term, that are retail, some that are long-term, that are retail, and some institutions that are dipping their toe in the water and kind of building a position perhaps. And I think that you do that by doing what we're doing, which is saying, like, look, we recognize that there's a huge amount of exploration potential, which we'll be focusing on, but we're not going to, blow up doing it. We're going to be trying to be very cost effective doing it, to try to add as much value as possible doing it. But we've also got an asset base. And we're going to try to increase the size of that asset base incrementally and do a whole bunch of de-risking too, answer questions, interrogate the data, and start de-risking this thing as we move it along. I think you got to do it all. And so you kind of have a multifaceted team with different skill sets that know how to do it, that had experience doing it, and everybody's pushing forward as fast as they can in their area of expertise. That's how we're doing it.
But give me a real life example of that, because I noticed in the press release again under the heading discovery drilling. Good heading, by the way.
Thank you.
You talk about C4. Was it C04? I think it was C04. Yeah. I mean, tell me what you were doing there. I mean, does it have any bearing as to how you're going to move forward?
Yeah, it absolutely does, 100%. So what we did is we brought in an expert that named Sandra Perry, who was working on using something called worldview technology, which was looking at the entire project through spectral imaging, satellite imagery, and it can identify different rock types. And so we kind of sorted and segmented down the project based on the work that she did to identify prospective rock types based on the spectral imagery. And then we had a real full-scale route of the geophysical data, and it was reprocessed. And an excellent professional went through that entire database and identified some targets, some geophysical anomalies, and we married those two. And if they were coincident, so if the worldview technology and the reprocessed geophysics told us there was a target, we looked at those very carefully. In the case of C4, we had a team that once that coincident data showed itself to be a real target, they were the next day, they were on that target, and they identified some rocks that looked of great interest. And they took samples of those rocks. The next day or two, they were brought back to Canada and sampled. The numbers ran. They were over 7 grams platinum. And so we said, that's a drill target. It's a spectral image. It's a worldview target. It's got a nice geophysical signature that's coincident. The guys ground truthed it. They picked up rocks. They found mineralization and, in fact, high grade. And so as part of our discovery drilling, we should test that target. And that was C4. And the cost associated with that, all the spectral imaging review and the geophysical reprocessing, you got to remember, was property wide. So we've actually laid out a whole bunch of targets just like that. And so there's, in my mind, massive leverage, because if you say, look, our methodology works, it may not work all the time, but it works pretty damn well. And we can roll a rig in there and actually say, yeah, that geophysical and worldview target is actually a mineralized ore body, and it warrants more work. And if we can do that 10 or 15 times across the property, that exercise has got some pretty good torque in my estimation. Now, we actually have about, based on assessment reports, there's over about $30 million that's been spent on this project, hundreds of drill holes and really high quality geophysical surveys and prospecting and stream set sampling and all that stuff that you need before you drill. And so we've got some targets that are great targets that have been drilled, and there's literally drill intervals in the database that are juicy, that are mineralized. Now we're calling those target advancements. So it's not like we came up with the idea, we're making a discovery. Somebody else thought it was a good target and they drilled it. Maybe they didn't get the funding to go back, or maybe they were focused on something else. But that's something we got to go back and ground truth and then drill. And there was a target that we drilled called Canabrava, which we succeeded as well. So those are two really good examples, and they're kind of similar type of ore bodies. They're sort of in the same type of area. They have sort of similar properties, let's say, to Kourou, which is about, it's a little over 100,000 ounces at 2 grams. So it's a high grade near surface target, and these guys look like that, and they're right in the same area. So that has application for more discovery in the future. The stuff in the north around Santa Mauro, these are big geophysical anomalies, massive worldview footprints, lots of the right rocks lying around the ground. And we're going to be drilling those targets up there starting this week.
Okay.
Some of them.
Okay. So you used the phrase there, in my mind, used it twice. In your mind. You're excited. You got excited and animated when you started talking about it. But again, looking at the share price thing, it's taking a long time to get off the ground. You're part of a successful group, discovery group. You've got some big names, big companies in there really advancing things. How much more time do you need before you get the information you need to get your fellow partners at Discovery Group excited, to get the market excited, because this has been flat for too long?
Mm-hmm. Yeah, it sounds like I just live in my mind, Matt. Maybe I'm just lonely in my own mind.
Being John Malkovich, let's go.
Well, he was in a half full, wasn't he? I think it's, I think that in terms of export, like there's a couple different ways to add value, and the resource expansion is an incremental way that you can tangibly say the ore body was drilled off is this many ounces here. Based on thicknesses, we've increased it this way, and people can kind of figure out what you've done. But nothing beats a drill hole of 120 meters of high-grade juicy ore, in drill core. And so we're waiting on some results to come back. We're drilling in San tomorrow. We may get those. At any point with the discovery drilling program, massive opportunities exist for massive value increase. So that could happen at any point. In the meantime, we have been adding value with these drill holes to expand resources.
Okay.
I don't know when I will emerge from the closet and have a group of people arm in arm with me to move this thing forward, right?
Well, it's more about, yeah, you're right. Big sexy drill results are fantastic. Okay, I guess we're saying is, what are you doing about putting yourself in a position to be able to do that? You're hunting platinum, palladium. I think people are excited about the mention of rhodium, but it's fairly erratic market, high as hell at the moment. But how do you put yourself in the best possible position to be able to deliver those results? Are you going to be able to do it by you continuing to loan the company money, or are you going to need to bring in a partner at some point next year? Sooner rather than later, to give you the capital to go and work out what the scale of this opportunity is, because you put out a few drill results now. Is it going to be enough to attract someone to the party?
I 100% think it is. I think it is, and I think we've been answering questions that are really important for potentially those types of strategic investors that understand mining and specifically PGMs for sure. And also, I think that we're going to get a few holes in there that will attract the retail investor that looks at it and goes, is it spectacular or not? Like, is it a massive interval or not? And they get that. And that's a shorter term way of looking at it, but shit, it works. People want, it has to be impressive to drive massive value increase if you're trying to get retail investors. If you're looking at someone who's looking at it in the cold light of day, they don't need 500 meters of 15 grams per ton to get them excited. They look at it and they go, can this thing be developed? And can we see ourselves owning and advancing and putting this thing into production?
Okay, so you sort of answer some of the questions, but how much more money are you going to spend? How much more of your money is this company going to spend giving you the data that you need to go and have that intelligent conversation?
Well, I've got about $200,000 left in what I'm going to advance to the company. And, we're done the drill program in 3 weeks, 3-4 weeks. So the assays will come into January, could be in the next week or two, right through till the end of January. So it'll be constant news flow there. I think we'll be able to, I think we already are answering many questions that are necessary to have meaningful conversations with people that are quite knowledgeable about the industry and mining in Brazil and PGMs and everything else. And I also think that it'll be pretty attractive for retail investors too. To answer your question, I'm not going to continue to lend money to the company. It's been an interesting exercise, and I don't feel bad about it. I can sleep at night. I feel pretty comfortable about it, and I feel excited about the news releases to come. And I think I won't be lonely very much longer.
Oh, sounds intriguing. Are you in or out of the cupboard at this point? I'm not sure. I can't quite remember.
I go right back in that thing when I'm done the interview.
I'm gonna pretend it's something to do with Narnia. So let's talk about next steps, because I think we're running out of time here. So Talk to me about next steps. What are the things we should be looking out for? Obviously, Assays coming back in through to sort of into January as well. Lots of drill numbers. You expect them, or you suspect that they're going to be the grades to be interesting, not only to a strategic partner, but you think retail should get excited too. But I'm not so sure about that one, because I'm not sure PGEs are well enough understood for retail to interpret the numbers you're going to give to them. So how do they determine what good looks like? What numbers should they be looking for? What would good look like?
I think that they should look, in terms of next drill holes, I look at how close to surface they are. That would be one thing I would look for. And so, if you get a mineral ore body that's deeper down, it's got to have higher grades. There's a lot more running against you. So near surface mineralization, I think we've got a 1.22 gram per ton average in terms of the existing resource. So around that, a little lower or higher, that would be a good metric, right? If it was a higher grade interval near surface, you got to think about what that will mean to the resource. It's going to expand, right? Growth. So those are good metrics. How close to the surface and how does it compare with the resource grade? And then you can make up your own mind. I think that an open pitable type of target has a very different grade profile than something that's down 600 meters. You can have much lower grade material, and if you have high grade material close to surface, that's pretty phenomenal. That's margin. That's margin, baby.
It's margin and earlier cash flow. Brilliant. Jim, thanks for that. We're going to look out for those assay results, and if they are good, pick up the phone, call me. I want to hear about it. Okay.
You know it. I'll call you anytime, over the weekend even, to let you know what's going on.
No, I'll take your call. Appreciate it, Jim. Perfect. Thanks very much.
Thank you, Matt.